Recently, I wrote about trading exits and how many people can easily enter a trade, but they have no idea when to exit their trade. There are so many things wrong with entering a trade without a plan, and one of them is you're going to have little or no plan for money management. And without managing your risk and your trading account, your presence in the market is going to be short-lived. Now, you have two exits when you're in a trade, a profit exit and a protective stop exit. With a protective stop, you're able to say, I'm only going to risk 2 points on the trade, and barring slippage, that will be your maximum loss on this trade. And while you can aim for 2 points or any other target for a profit exit, the market is really what's going to dictate your profit. The best that you can do with exits for trading profits is to trail to take advantage of extended moves, profit targets to assist you with a favorable risk to reward scenario. You can scale out partial and or just monitor when the move is losing steam. And the question is really what's right for you. Now, some people have an easier time in a trade once they take off a portion and they get paid for the trade. Others will use market cycles or rhythms or structure to pinpoint places the market may either stall or turn against the position. There are those who can read price very well and will exit if price is showing it's starting to run on empty in the direction of the trade. There are many ways to take your profits, and although you're going to hear the plus and minus for all of them, at the end of the day, it really all depends on what serves you and what you can do consistently. Now I want to take a look at a few ways to take profits on trades that I and many that I know have used over the course of their trading careers. The first one I'm going to show you is just a simple trend line. And I say simple. However, like many things in trading, you want to quantify a way to draw and update your trend line so you can be consistent over the course of many trades. Now, this is an actual entry that took place a few months ago in the spot market, Forex market. Now, it's beyond the scope of this article. However, it's simply a confluence of several factors, which is the setup, and gearing down to a lower time frame for timing the entry, which is the trigger. We're going to use a trend line break to let us know when the move higher may be over. Now, we're not looking for a slice through the line. However, we're looking for a solid break of the line, and we will adjust the line when price puts in a lower obvious swing and breaks the previous high. So I can add a trend line as shown here on the chart, which if price rockets down from the peak of 226 pips, I'll end up with perhaps 40 on the trade. This is one reason many people scale out partial profits. It can be extremely difficult watching price retrace and eat up all the unclaimed profits that the trade has given you. Now, things have changed here in regards to the trend line. As you can now see, price has had a healthy pullback to the area price broke out of. It then made a new high, which now allows a more aggressive trend line. Now, if price decides to push through the trend line, you can bank over 100 pips. Here we're seeing price make highs, but then pull right back into the yellow ranging box. Well, there's one area that price made a new high. It was done inside the range, and it's not obvious. I'd negate it, and although it will signal the break earlier, we would still wait to see if it was a true break and not just a run at that level. Now here we've used a different low, and I've also added an aggressive line in red. You may want to use these aggressive lines after a parabolic push in price. You can see how price smashed through the regular trend line. The red line, while it did break, price did not make an aggressive move down. And that's fine because, as you can see, after price broke the red line, it made little attempt to test the backside of the line. You'd probably place your stop at the bottom of those small candles that occurred just before the big push through. Now, this is a nice and simple rules-based exit strategy that takes advantage of the trend until you can objectively see that it's broken. And are you going to leave profits on the table? Sure you will. And that's just something you're going to have to learn. It's just part of the game. So go through some of your past trades and see if you can identify where you would have exited if using a trend line based target method.